right, welcome to the Trader Investors channel. Today we're going to go over the markets again as we did last few months. We skipped last week, so we might need to do some refresher. And then I want to do something in addition to that this week. I want to see if we can create uh, some scans in TradingView and see if we can find some interesting setups in addition to just these spies and cues that we've always been looking at. What other opportunities are there? I think I want us to start to kind of progress into the learning and go into that as well. So that's just the plan for today. So let's dive right into spies and cues first. So if we look at our weekly or monthly, we're in an uptrend, right? There's no denying that we are still in an uptrend. We had a pullback last year. The whole of last year was pretty much a down year. And then this year, it looks like it wants to completely reverse and recapture the all-time highs. Right? Same picture in the Qs, right? Qs and spies are really doing the same thing. Just real quick, if we look at IWM is kind of in a strange spot. After that downturn, it did have a nice move up, but then now it's struggling to capture, the all-time highs or heading back that way. We're still around that 50% retracement from the COVID low to the high that was formed post-COVID. Right? We're still hovering around that 50% retracement continuously. We're continuously in that zone there. I created area of interest. Yes. So this area here. So it's kind of interesting that the U.S. Market, like this is mostly U.S. companies, right, in IWM. So there's some discussion of recession that continues to linger around, and I think they're really displaying that. Right? There's some fear, and because of that fear, they're not really pushing any higher. But the other main gauge that I have for fear is the VVIX, right? And in my VVIX view, if I am above the 120 line, like it's really panic mode. If I'm below the 110, it's safe mode. It's risk on, right? Down here is risk on, up here is risk off, and in between is like, hey, I'm warning you that I'm doing something, right? And this is just a gauge, right? Doesn't mean that every time we're up here the market collapses. It might just be a small blip in the market, but there's some big moves that happen throughout. So it's good to pay attention to those. So that's the fear gauge that I have. And so when we go to our weekly, it's similar to our monthly. So let's just go to the daily. So on the daily, what we have said, right, in our Fibonacci retracement, we have looked at the recent low to high, and we are above that 50% retracement from that recent low to high. It might be easier to see this. So this, in this move here, right, this is the move we were looking at. In that move here, and just in case you're wondering, like why we're not drawing it from here or here, this is really on the monthly that is drawn. It's on the monthly. So this move here, you could argue we went below the 38.2 and let's redraw it. You could make that argument, but I feel like it's close enough on a monthly basis. It's okay. Either way, it's fine. But on our daily, so this move up has been giving us a series of lower highs and lower lows until we got down to the 408 area. From there now is just a V bottom, right? Straight down, straight up. And what's interesting about this area is when we came to a supply zone, we went sideways. We did not go down. I mean, slightly. A couple of times we attempted, but we stayed sideways. We shot up, created this huge gap. We created this huge gap and haven't looked back since. It's the same picture here, right? We're creating this huge gap. And, you know, a couple of weeks ago when we talked about possibilities that if we get a retest here, we can take it to the upside. Or if it collapses, we're going to the downside. Well, the downside doesn't seem to want to be part of the picture. A couple of things we have to notice is this 78.6 on both the SPYs, this on the daily recent down move, and the Qs. 78.6 is captured. Now we're gonna redraw to the upside. It's a matter of preference when we redraw it, because we really don't have anything really solid that says, hey, have I retraced enough, right? It just keeps moving up, so we might just keep pushing it up. But this one I'm gonna leave it like this, or just delete it and not draw it, because I don't have a retracement to have a good anchor points. But this gives me kind of a gauge as I look at that. So let's go to the hourly. Let's go to the hourly, because we discussed the previous week. We did not have a chance to connect, but the week prior to that we had our session on Thursday, and we said if price keeps pushing up into this supply zone and it gives us a pullback, it's time to enter to the long side. So I'm hoping you saw this and you took an entry, right? Because the entry is this. The entry is this area, right? This flag that we formed on the way up, this pennant that we formed at the break of that high, that's our entry. And I'm going to remove this old trend line because it's really not into the picture, so it just confuses us. So here, as we form this consolidation area, remember it's rise, consolidate, rise, or it's rise, consolidate, fall, right? That's where we see action. And at this supply zone, which we've already gone way past it, we did not even test that supply zone. And if we draw our gaps every time they occur, we have something to look forward to as we take this trade. So this trade, if you have taken this trade, the right trade is this gap could be a potential problem area. We didn't quite get to that gap, so hopefully, you know, that trade remained intact. Of course, there are always some risks, right? So here's the entry. The low here of this consolidation is the stop, or if you want to go lower, that's fine, is the stop. But the high of the gap is our 1-to-1 ratio, but we're always targeting 2-to-1 ratio. I'm comfortable with this up here, right? I'm comfortable with this up here, and we did get our 2-to-1 ratio, and now we can stay in the trade with the remaining balance. So when we come back to discuss your trade, hopefully this is what we will see as well. And it's the same picture in the SPYs, right? We stalled in the zone of the demand, the supply zone that was formed earlier. We stalled in that demand zone, but we did not have a strong, hey, I'm going to collapse from this demand zone, right? That we did not have this. Sorry, I keep saying demand zone. We did not collapse from this supply zone. That didn't happen. What we're seeing is we actually break above it. We don't even test it, right? Usually you want to test it to go up. We don't even test it. Let's just say, hey, you know what? I'm going to ignore anything and I'm just going to keep going up, right? So we have a straight line up from this area. So same kind of entry. Here's a gap that we should uh, look at. It's coincidentally, if you look at this gap from way back, I don't know from way back when, this back in beginning of August, we closed that gap, but we also formed this almost the same gap, almost the same gap. So I almost don't feel like uh, taking it out, but just to be on the clear side, the actual gap is now we have a new gap here, right? This is the actual gap. So we have this gap. We'll see where the markets wants to go, if they want to close this gap before we resume to the upside. If we look at the daily, uh, we're starting to get really, really close to our all-time high. We're starting to head that way. So this is really the setup. Uh, what I want us to do for this following week as a setup is look for an area of interest in the gap. I hopefully close this gap and go. This is where I would like to see a trade setting up somewhere in this zone, right? Not exactly where, but somewhere in this zone is where I would like to see a trade setup. Otherwise, if we have a very strong retracement in this move up, then our next area is our green to green zone before we resume. Right? Make sense? You're on mute.
Oh yeah, definitely.
Yeah. Okay. So now trades. I want to hear trades.
I think it was good this week. Followed the plan that we talked about last week. Just kind of followed up and executed, and thankfully, the chart was kind of giving me the move that we wanted, that we talked about 2 weeks ago. So I actually entered a little later because it did consolidate in that supply zone for a couple of days. So I just waited for confirmation on what was going to happen. And then I actually entered, I missed the first entry. So you see that first entry right there. It had, it opened, came straight back down. So I got a little bit nervous, mainly saying, hey, look, inverse hammer, look how quickly they pushed it back down. And then right away they pushed it back up, and it kind of kept progressing from there. I just waited that day. I just didn't trade. I just thought, maybe there was a gap above it. There was a gap at 375. And I thought maybe it would reject there or maybe bounce back down, and it blew through that gap as well. And then the next morning, we had a gap down right where that gap was that we closed the day before. And then we formed that hammer. You see it was gap down, pushed right back up, used that gap as support, and then formed that hammer. And I said, this is the time. So I entered right there at the next green bar, right after the first hourly bar formed, and then entered on the long side right there. And then my stop loss was right at the right there, pretty much right there, a little higher than that. There was a gap right there. That gap pretty much right at the top of that gap. Yeah.
Yeah, this is it's a pretty long distance, right?
Yeah.
Yeah, but
I told myself, no, I wouldn't wait for the 2x. I would cash out of the um, a half of my position at 1x, and then which would have been right at right around halfway through the gap. But we opened and we obviously had a big gap up, and then so I kept watching. Um, there was another gap actually above the gap that we have right now, even that was formed. So it closed that gap as well with that big open. And so I said, okay, I'm going to just see where it goes. As soon as we closed the other gap and came back down a little bit and started consolidating, I closed out half of my position. And then now I just have runners going, and
okay.
I moved up my stop to entry.
Okay, so I like your entry. I like how you really thought about the entry. Uh there's some gap here that I had removed from earlier time. I think it's if this is the gap here that I see, but there must be another gap that you have seen. Anyway, so I do like how you took that entry. There's one thing that I want to point out that will make it easier uh, to kind of remove fear as well. So when this consolidated, and when we didn't have this hindsight, but when this consolidated, and you were starting to prepare, what should I do, right? What should I do? And you said, oh well, they're pushing the price down. If you draw your gaps immediately, right, as soon as the uh, price opens the next morning, if you take the high of the last bar from the previous day to the open, because you don't know the low yet, right? As soon as it opens, you don't know the low. And just to prove that point, maybe let's just go to a 15 minutes chart here. So I think this is the one, right? So here's the high, and then here's the low, but it opened somewhere here, so it's pretty close to where this gap is. So when you see that gap and it doesn't close, it can give you that confidence, right? This is the gap
Mm.
here. When you see, hey, there's a gap, but we're not closing the gap, and the very next bar actually takes out the previous bar, and we take out this box, it can give you the confidence. If we take out this high, then this bar on Friday, the third hour bar on Friday is your entry.
Mm.
Why am I saying this? Because that gives you a, a, a lot quicker entry with a much smaller risk. Right now, you're almost at that 2x because of that of how you enter it, right? So again, I'm not saying your entry is wrong. Your entry is beautiful. I'm just giving you additional ways to think about this approach. Right? If you look at this gap, say I'm
Mm.
above this gap, I can take this entry a little bit sooner. A little bit sooner. Right? Even if you don't want to take it right at the break here, you could say I want to wait until this box is broken. Right? The earlier I drew this flag, right? This pennant. You can say I so if I am staying above here, and I'm definitely staying above here, I can have confidence that it's gonna go to the upside. If you
Mm.
want confirmation, is I break above it and I test it, so this hammer actually tested this bar. So again,
Mm.
your entry is not wrong. but now you have additional things you can look at to make your entry sooner if you choose to do so.
Got
But
it.
outside
Okay.
of that, it's beautiful. Yeah. Any other trade?
No, I just focused on spies and Qs, and they're kind of identical in terms of their moves. So I just decided to go with one. So I just
Yeah.
picked Qs because I thought tech was a little stronger, and would give me more of that extension move upwards.
Okay. So because you have a runner, right, and we have this gap, I say put your stop tight.
Mm,
Right? Don't let it come back all the way down here. Right? This
okay.
gap, somewhere in this gap, should be your stop. Uh, it's okay to stop out because then we have another entry. When we pull back to this zone, we have another entry.
Mm,
So it's okay for that runner to stop out.
okay.
Right? You've already made a little bit better than 1x, but by giving back all of that, it's just going to be painful. I don't like
Hmm.
giving back, right? So I'm okay if I'm wrong in my assessment and it goes the wrong way and it's out. I'm okay with that because that's just the nature of trading. But I'm never okay to have 1x 2x move and then I have to give everything back,
Hmm.
right? So protect your gains.
Okay.
Okay. Okay. Any other ticker or entries? No.
No, I didn't make any other trades.
Okay.
I was focused on Qs.
Yeah. No. That's good. That's good. Okay. So as I mentioned earlier, let's start to think about a little bit more uh, advanced way of how we can structure additional entries from other tickers, right? So there's one way is just to build a list of watch list, a list of stocks, and just go one by one, right? That's one way. Another way is just to use a screener, right? And I've built many different screeners, and one of them is pre-market gap up. So if you today was kind of easy to see a pre-market gap up because everything gapped up, right? Pretty much. When spies and Qs gap up, pretty much everything is going to gap up. But especially on a consolidated, broader market, this pre-market gap up is going to give you a good opportunity to see, hey, what can I do? And what can I do means when there's a gap up and price decides not to close that gap, you have a runner, right? Not it's not 100%. Nothing is ever 100%, but that's one good way of looking at it, and so you can take advantage of taking an entry. You still have to do your assessment, right? This is a pre-market, so you're looking at this maybe 30 minutes, 45 minutes before the market opens, right? As soon as 5:30 comes around, there's some action. So you can take a look at those and do your analysis, and based on your analysis, say, hey, is there something that I can trade today? If you look at this one here, it gapped down, but it never stayed down, right? It was never a runner to the downside. It actually went back up, right? That's why you have to see it. You have to see it. This one bar that gapped down, this 1 hour bar, nothing was ever below it, right? It actually formed a hammer and everything was up, up, up from there. The next day it gapped up. Nothing was below this gap for the rest of that day. This is how you can use on a Friday same day expiration at the money when you don't see it closing this gap, and then you get an easy 2x 3x move in just small because it's 0 day expiration. That's why I wanted to do this, right? So this one here. But the very next day, this gap actually closed, right? This gap actually closed. And then it gapped up, but it closed that gap within that same hour. This day was no runner because price remained in there. Next day, gap down, but then price remained. So you have to see every ticker, right? For every gap that it gives you, gap up, it remains above the gap. So if you do that Friday expiration on this one, it was not so successful because it was pretty much flat. When you compare it to this one, so you have a gap up, but price keeps breaking the highs, right? A couple of bars, or this is kind of a doji, and then it just keeps breaking it up. You can take this trade. This today, it gapped up and it broke that high. But when you look at CrowdStrike, this gap up, it didn't really break the high. It didn't break the low, it didn't break the high. It did for a short period of time, but there was no confirmation, so it was consolidated. So you have to be careful on how you use these pre-market trades. And what I want to do, like you see here, Macy's gap up, and then it stayed above that gap up. So now I just want to show you uh, how I built this. Right, I have a preset market cap. You can place this however you want. You can have it go as high as you want or as low as you want. I'm looking at the current trading day, stocks and ETFs. There's other mutual funds and other kinds of funds, ETNs, but I just focus on stocks and ETFs. I focus on US market because you could also get OTC. I don't want to get OTC. You subscribe to other markets, then that's fine. Price, I like to see price above $5. Uh, Even anything below $10 is starting to think of penny stocks, really. But how I kind of manage that is uh, through volume, average 10-day volume, 10K, 50K to 50 million, and so on. Right, so I play it with the volume. A lot of times I don't go 50K. Like I want to see 200K. Actually, this is a lot of times this is what I do. Right, this is where I want to see my average volume. But this is not average, right? I'm just playing with the number for you. But this is where I really play with my volume, right? And so I want to see 100K, a million, 500K. It depends on the stock and what I'm trying to achieve that particular day. So as we're building this, it's important to note that. Pre-market volume, I want some pre-market volume. I want some percent change. And that's pretty much it. I mean, there are few things here that I'm not paying attention to. I think there comes some of it are just built into that. But the main things I want to look at is what is the market cap that I'm interested in, stocks or ETF, current trading day, right? And so pre-market change above and some value here, volume. This is really what interests me. This is really what I'm interested in. So that's just a simple way of creating a filter, and then you can have some runners. And so I have a few things, right? So there's what I call bottom fishing. I don't want to save this one. It didn't bring anything. but I have some filters. Like you don't see me use moving averages in my tradings, but for the filter purposes, sometimes I'll say, hey, if um, the 30 is above the 50 is above the 200, give me the list of stocks. And what I'm trying to do is when price is near its low, but it's making um, a comeback, that's what I want to catch. So I don't want to go into details on how this one is built. I think right now I want you to really focus on the pre-market gap up. I think let's just focus on that for now and see. Don't take any trades, but just analyze and note, and then maybe next time we meet we can talk about those. Right? Again, your focus is that I think what I suggest is at least 500,000 average volume. I think that's what you want. Don't touch the volume because that's at the start of the day you might not get that 500,000. So I don't want to exclude those. But like over a 90-day period, if you have 500,000 shares or more trading, I think that's great because that shows liquidity. Right, that's the main reason why I want to do this is for that liquidity. So let's get that liquidity into the picture. Yes, save it. So now we have it saved. So every morning now, once you save it, every morning it's a new list. It's a new list. If you want, you can send this whole list to a watch list. So you can have it here to play with. Or if you want, you can sort it, you can add stuff to it. There's a lot of things you can do, right?
Yeah.
But it makes it easier.
Mm.
So
Yeah,
can,
I'm playing around with
yeah,
this one.
yeah. Play around with it. I think it gives you a good opportunity for trades outside of our main ETFs. Again, I'm not encouraging you to do a lot of these trades, but I want you to see how some things are done.
Sounds good,
All
Beanie.
right. I think
All right.
it's been a good day, so we can wrap it up for today, and we will talk next week.